Happy New Month, everyone, and welcome to our weekly series dedicated to price action based technical analysis. I'm thrilled to have you join me for our first edition in February. The past month has been quite eventful, with the market experiencing a roller coaster ride of suspense and uncertainty. The anticipation of a potential Fed interest rate cut in March was abruptly challenged by the resilient US economy, which continued to deliver positive data week after week. As a result, the timeline for the much expected rate cut has shifted from March to May, prolonging the suspense and influencing the market dynamics. Now, the recent release of the upbeat NFP data on Friday has only fueled concerns about persistent inflationary pressure, further cementing the case for sustained monetary policy restrictions. Recently, the Fed chair reinforced the notion that a rate cut in March is unlikely, and hereby adding another layer of complexity to the evolving economic landscape. Now, in the face of these developments, what strategic options do we have to navigate the gold market in the upcoming week? Join me as we dissect the current market structure from both technical and fundamental perspective, utilizing tools such as the economic calendar, trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for the new week. But before we proceed, please note that this presentation is for educational purposes only and should not be considered as financial advice. While our aim is to enhance your understanding of price action analysis, always exercise caution and seek guidance from a financial advisor before making any investment decisions. With the groundwork laid, let's chart a course into the details. So our first point of contact on the chart is the daily time frame, where I was able to identify a simple trading setup after considering the nature of price action since the month of October. That's an historical data of about 4 to 5 months. In fact, we've been using this structure since the beginning of this year, only that we have a new level serving as our key zone for this week. Now, looking at the structure, it is quite obvious that price action has been bullish. Of course, after connecting the series of higher lows here, we have a beautiful ascending trend line to work with, and coupled with our key level situated at the $2,035 area, we have a situation now where price action is currently trading above both of the structures. And of course, you know how we use our ascending trend lines and key levels in this community. As long as price action remains above the structures, we want to be looking out for patterns and structures that support the idea of buying this asset. Now, if I zoom into this current structure and look at this closely, you will see that during the second half of last week, price action was more or less trading above that key level, as every attempt by the sellers to break through was always met with strong resistance from the buyers, giving us a clue that buyers still have a say in this market. Now, with the information we have gathered here, you would agree with me that we are at a crucial moment in the market where, depending on how price reacts to the structure, will determine what our next line of action will be. Now, the question going into the new week is, will price be sustained above the structure to give more opportunities to buy, or is price going to break down both the key level and the ascending trend line to incite a sell-off? Now, with this being said here, I have a simple trading setup on the 4 hours time frame, which we will be using to guide our decisions going forward. But before we go into the details on the 4 hours time frame, it's important that we keep tabs with the fundamental factors that will be affecting the market sentiment in the coming week. And by monitoring the economic calendar, we aim to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential opportunity prior, during, and even after this economic event. Now, based on the assets we are talking about at the moment, we are only going to be focusing on economic features from the United States alone. And for this week, we only have a couple of high impactful events, where the first one is coming in on Monday, February 5, and that is the Fed Chair's Powell speech. His remarks provides insight into the bank's monetary policy stance, economic outlook, and potential future policy actions. Now, the anticipation of this speech has significant impact in market sentiment, as traders and investors will closely analyze the rhetorics for clues about future policy direction. Then later on that day, we are going to be having the ISM Services PMI, which is considered to be a key economic indicator that measures the performance and expectations of the service sector in the United States. A higher than expected data typically signals economic expansion, boosting market sentiment, while a lower than expected reading may indicate contraction and potentially dampening investors' confidence. So these are the two high impactful events we shall be looking forward to this week. And of course, we do know that the anticipation of this event usually has a way of influencing the market sentiment, which of course would reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame, where I do have a simple setup which we will be using to guide our decisions for this week. And on the 4 hours time frame, all I did here was to consider the nature of price action in the last couple of weeks, and of course it's still evident that the bullish momentum still looking viable, as we have connected a series of higher lows here, giving us a couple of ascending trend lines, as you will see here. But this is the one I will be using, the one right here, the one below here, which is you see, as soon as price tested this level on Friday, we saw buy pressure resume around that area. And interestingly, what makes this trend line more intriguing is the fact that it also shares a confluence with that our key level for this week. Now, it's quite simple. What we are going to be doing now is to see how market participants will react to this confluence at the beginning of the week. If this buy pressure persists above the structure, then definitely we will be looking out for patterns and structures that support the idea of buying this asset. And if price goes ahead to break out of the 2060, then we will be thinking of adding more buy position. But if price breaks down to 2035 and that ascending trend line and probably retests the structure, we will have no other choice than to start considering selling this particular asset. So let's see how the market will play out. Trust me, I will be with you in the comment section of this video at the beginning of the week, after monitoring how participants in the market will be reacting to this current structure to determine what our next line of action will be. If you have found this content helpful and useful in making your independent trading decision for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.